Good morning. This is David Groce, your Texas tax and lawman. Today we are tackling the Pass Through Deduction found in the 2017 Tax Cuts and Jobs Act. Of all the provisions in the new law, I was most excited about this one. I won't say I'm disappointed, but I sure was hoping that all pass-through income would be subject to the same 21% tax rate as corporations. That would have been a game changer for my average client. But alas, the small-town businessman did not win as much as the Wall Street wealthy guy. But in the modern marriage of Wall Street and Washington, I guess I should not be surprised. Nevertheless, small business owners paying tax as a partnership, S-corp, or sole proprietorship now receive a pass-through deduction of 20% of their qualified business income. The small business owner understands this. But let me simply state what pass-through income is. In a corporation, the company pays tax on its income at the corporate level. It then pays a dividend to a shareholder, and the shareholder pays tax on that dividend. The corporation pays tax and the shareholder pays tax. That's called double taxation. In a pass-through entity like an S-corp, an LLC filing taxes as a partnership, or a sole proprietorship, the company itself does not pay taxes. The earnings pass through or flow to the partner or owner's tax return, and the owner pays tax at the individual tax rates on the net income of the company. That is pass-through taxation. The new law gives these business owners a pass-through deduction of 20% of the qualified business income. However, the new law provides three qualifiers on this deduction. First, the deduction does not apply to service businesses that make over $315,000, like attorneys, accountants, and doctors. Humorously, stockbrokers were specifically exempted. I guess Wall Street had better lobbyists than the lawyers. Also, engineers and architects were exempted. I may be poking fun at the law, but this creates real questions for my clients. Are they selling a product or a service? Think about your insurance agent. He sells you an insurance policy, but the insurance company pays the agent a commission for selling the policy. Is that a service or not? Arguing for the taxpayer, I of course would say it's not, but we do not know the position the IRS will take. Second, the deduction is limited by the wages and capital of the business. The 20% deduction cannot exceed 1, 50% of the wages paid by the corporation, or 2, 25% of the wages paid plus 2.5% of the purchase price of the assets. Both of these limitations may totally limit the deduction for some taxpayers. Third, the deduction applies to each business. Unless a taxpayer makes an election to combine the qualified business income of multiple entities, we will have to run this deduction on each company separately. Finally, the 2017 Tax Cuts and Jobs Act tells us what the pass-through deduction is, but not exactly where we take it. We may claim it on a line beside the standard deduction or on a separate line on the tax return. We do not know if this deduction reduces only taxable income or does it also reduce the self-employment tax. These are uncertainties that we will have to walk out and tease out in coming months. This is going to be an exciting year with lots of changes. A couple of videos back, I shared Einstein's amazement with the complexity of tax law. Well, today, let me share a little Einstein humor that I think applies to the math involved in calculating taxes. He said, "As far as the laws of mathematics refer to reality, they are not certain. And as far as they are certain, they do not refer to reality." You know, accountants crave certainty. But change and uncertainty is part of the wonder and adventure of life. Keep us in mind if you need help navigating the uncertainty of planning, running, and paying taxes on a business this coming year. Thanks for tuning into our video today. If it helped you, click like and subscribe below. Forward this to a friend on Facebook, LinkedIn, Twitter, or YouTube. Next week, we will unveil our long-awaited tax comparisons between various taxpayers under the old law and the new. Make sure you stay tuned. You don't want to miss it. Adios. Texas Tax and Lawman Legal Disclaimer. Hey, I'm a lawyer. You know I have to have some lawyer mumbo jumbo. This is a general information video, not client attorney privilege information. The content is information only and is not directed to any specific facts or circumstances and cannot be relied upon as a legal opinion, even though that would be nice and save you a trip to the lawyer. If you have a specific legal question, feel free to contact David Groce directly or seek qualified legal or tax counsel in your state of residence, state of mind, or whatever place you call home.